fellow traders. 'Tis I, the Rumpled One. It is Wednesday, June 13th, the year 2018. Let's talk trading. You may be wondering, why didn't I put out a video yesterday? It was my birthday. I completed another lap around the sun. And so I kind of took the day off, did my usual introspection, see how things are going. And I also patched up my driveway because I bought myself a birthday present. I'll have to do a video on my birthday present. So anyway, let's get back to it. Why you do not get better at trading, part 14. So I hope you don't think I'm dragging this out. I notice my views have dropped off on these videos. Maybe I'm boring people. I don't know. You'll have to let me know. A few people have thanked me, said they picked up some tips. So I guess I will soldier on until maybe everybody drops out. Or maybe they got better. They don't need to watch it anymore. So who knows? Anyway, what are we going to talk about today? Well, those of you who have been with me for a while know my favorite movie of all time is Cool Hand Luke. And, you know, most people remember Cool Hand Luke because of the famous quote, "What we have here is failure to communicate." So, by the captain. But, there's a couple other quotes. And actually, when he got his nickname, he was playing cards and he won the game by bluffing. He had nothing. And Cool Hand Luke said, yeah, sometimes nothing's a pretty cool hand. And that's how he got his nickname, Cool Hand Luke. So what's that got to do with trading and why you do not get better at trading? Well, you see, sometimes, as I like to paraphrase, doing nothing is sometimes a pretty cool thing to do. So if you've done any research or read any books about some of the greats of trading, you know, they usually say something like they make most of their money doing nothing. They make most of their money just waiting. I think there's a few like Buffett and Livermore and possibly even Getty. You know, you just wait. In fact, what made me add this to the list is, you know, we talk about patience a lot and, you know, waiting for the right opportunity, but just actually doing nothing. I mean, just sitting there and watching the screen. And there was a story I read. I hadn't heard this one before about the old alligator and the young alligator. And the young alligator's like, hey, teach me how to hunt, you know? And the old alligator's just, you know, floating in the water the way they do. And so the young alligator's like, you know what? This guy, he's not doing nothing. So the young alligator goes and he goes grabs some kind of small animal and brings it back. And he goes, see, look, you did nothing. And look what I got. And then the old alligator's just sitting there doing nothing. And then young alligator goes off and he grabs, you know, a couple more small animals and brings them back and goes, see, I'm a better hunter than you. The old alligator's just sitting there. And then all of a sudden this wildebeest comes down to get a drink of water. And next thing you know, the old alligator's, you know, enjoying this really nice feast. The moral of the story is you wait for the opportunity. And I thought that was pretty good. So doing nothing. But there is one thing you do have to do, and that's always employ your money and risk management. You have to do that every time. So doing nothing. Well, you know, if you did nothing and you just waited for price to hit one of these lines and then you traded with the candle color, you'd be in a pretty nice profit. You know, and the same thing here. If you did nothing, you know, price open and you waited for it to here, or you turned on your screen and you waited for price to get there, or you turned on your screen and you waited for price to get there, and you took those long trades, profit. But you had to wait. It's kind of like some of these weekly gap trades here. We still have 1, 2, 3, 4, 5 open gaps. It's possible they fill, it's possible they don't. We'll just have to wait and see what happens. We've got the FOMC coming out in about 3 hours, a little under 3 hours, so could be some nice price swings and it could fill all of these gaps. You just have to wait and see. And once again, here on the daily, if you just waited for price to break out, hit that. That would have been 20 some pip, 23 pip profit there. Just all you had to do is just sit and wait and wait and wait, do nothing until that time. And I'm probably not, this isn't anything earth shattering to you guys, but we just have a tendency, we want to do something. We just don't want to sit here and wait for like 2 or 3 hours. No, we see price moving. We want to jump in. We want to get those little animals, right? Or do you want to get that wildebeest? It's kind of up to you. It's very, very, very simple. Now, I heard something today. I think I was listening or watching a Thomas Sowell YouTube video, and the interviewer was asking him something about, I can't remember exactly what he was asking him about, but Thomas Sowell goes, yeah, it's simple, but it's not necessarily easy to do. Trading is simple, but it's not necessarily easy to do, especially trading profitably, because it involves a lot of waiting, which is kind of against most people's human nature. They just don't like doing it. They don't like to wait. And it goes on both ends. Sometimes you don't want to wait for the entry, and then sometimes you don't even want to wait for the exit to make that to get that wildebeest. You settle for the little rabbit or the squirrel or the minnow. It's so easy just to grab, those 1 or 2 pip profits. But like we've got the pivot point right here. So let's just say you want short here. And you came all the way down here. Are you going to wait for this? Statistically it's in your favor. Or are you going to say, I got enough? It's just one of those things. Sometimes doing nothing's pretty cool. Did you enter here and maybe put your stop 1 pip above here and put your TP here, and then you just walk away and see what happens? And we can move on here to the rat zone. You can see here there's no separation, no real rat trades happening. Once again, we see this missed pivot here and this missed pivot here. And we know there is a high probability that pivots will fill. In fact, where is that pivot? I think it's here. We should probably move that pivot chart. Wait, let's see, this is normally H4. I switched it, I guess, to show something. But I like to have H4 because then you can see more of the history here. So once again, we've got an open pivot here and an open pivot here. You can see here's the monthly pivot. And where is the weekly? And here's the weekly pivot. It's already been hit. We hit weekly R2. Probably going to move back maybe to weekly R1 the next day or two. We don't know. Could go up to R3. But let's see. Let's slide this chart down to here. So we look at the pivot. Then we can look at the stats. See, we got a missed pivot here and a missed pivot here and a missed pivot up here. So these pivots should probably be taken out based on statistics. price action, once again, just waiting. You wait for a ball. You wait for price to get to the line. I mean, you could have traded out of the wick zone right here. But you're just doing a pure price action at the line, red at the line, profit. You see green at the line, small profit. See 2-ball, green at the line, small profit. Or you wind up scratching the trade either way. But usually what I do is I use my spread dots indicator. So when it switches from buying to waiting, then if I see it hit selling, boom, I'm out. So I don't give back too much of the profit. Once again, waiting, wait for price to get to the line, wait to sell. You see here, if this is your trade at the line and price is here, you had to wait a bunch of pips and maybe you got anxious. Maybe you didn't. If you got anxious and you sold, that's okay because you profit. But if this is really your trigger, you don't want to be doing anything here. You want to wait for your trigger. And watching all that pip movement, but not at your trigger, that's just part of trading. You don't have to try and jump into every little thing. And we've got the wick zone. Price is in the wick zone right now. You know price doesn't like to exit. We've got FOMC, so if price is between here and here, you know where to go long, you know where to go short. Prices winds up in here, you know where to go long, you know where to go short. But you just have to wait. Do nothing. Holo, highest open, lowest open. Let me put that back to M15. Oh, we can leave it at M5, maybe scrunch the chart there. And you can see what happened. Price dipped in, came out. And looking at the tick chart, you can see where price has gone below the peak and gotten above the valley of the ask right here with our time and sales. The inventory reduction bars, short, paid off nicely. See, it put in a new IRB right here. My entry chart, as you can see, with the these are the naked bars. They haven't been covered by price. So usually there's not too many naked bars on a chart. They almost always get covered. You can come see, you come back here. Okay, there's a naked bar. And there's a naked bar. Looks like, except I think one of these, there's a problem. I can't remember if it's the red ones or the green ones. I think it's the red ones. There's a problem. The indicator's not quite working right. So that's something for me to work on. But you see here, we don't have a higher high, but we do have a lower low. So this candle body has not been covered. So it's naked. You see here, we don't have a lower low, but we have a higher high. So this candle body has not been covered, so it's naked. I wonder if I've got to put a movie rating on there talking about naked candle bodies. Chart porn, right? And here we go, looking at the Einstein line. You can see here it just popped out a little there, popped out a little there. Probably a couple of, well, actually, this was before started, so there was one little short and either scratch or maybe a 1 pip profit, and that was that. So, fellow traders, remember, sometimes doing nothing is a pretty cool thing to do. So it's not what you trade, it's how you trade it. Let's all go and drain the banks.